Hey folks, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Wednesday, November 27th. We're going to take a look at Archer today. So we took a look at Archer a few days ago. It crushed through the levels that we had with this mega run here. And so I put in some new levels. We did have some price action to go off of previously, which is helpful, right? Up in this range. And so I worked off of that to build in some more levels. So as the run continues, let's see what we have. So we have current nearest in resistance level that I have is 838. Support level 777 and 748. Working off of both of those today. Whoops, didn't want to do that. Now the next resistance level is if it's able to get some motion over this 838, as I see it, 899 and then 943. And then there are going to be some additional above that that I put in, I think. So let's just get over here and we can just mention them. 1040, 1116, 1182. Picture might get a little clearer because some of those are pretty spacey as far as at least percentage wise. Not dollars and cents, right? It's less than $1, 1040 to 1116, but a stock of this price, that percentage gain is quite a bit. So we might be able to get a bit more granular if it does get up into that range and fill that in a bit more. Now if it gets dippy, loses 748, 699, 645, 603. If I'm an Archer bull, to be honest, I don't get super bent out of shape or itchy at this 699 support. If we needed to re-come down to the 645 and it looked a little wimpy, if it started to melt a little bit, I would get, pretty concerned, because obviously the floor that this built, that it then jumped off of, is way down in the twos, right? So just sort of being aware of where we're situated here, but being that it's been so sort of jumpy and it did a nice double bottom here, and that was, had potential to be sort of immediately dippy, right, from a slight run. That's why coming down here, I would just want to know that it has a strong structure here and is able to move off of this 645 quickly, right? So I could see it putting in a double bottom and going, but if I had my druthers, I wouldn't want to see it come below this 699. But like I said, 645 is there, and that could still sort of play out just fine. This isn't to say that it's going to dip or it needs to dip. It could certainly just carry on and start pushing off of this 838 and toward that 899. So of course that is more than welcome by the bulls, I'm sure. TTM squeeze indicator, this lengthy trigger now turning into a relatively lengthy fire. We're getting in the thick of it a little bit. I would suspect with this long of a trigger, there's more fire to be had here. So it's maybe another indicator that maybe there's more fuel left in the tank. This is all going to depend on catalysts, news items, strength of buyers continuing to overpower sellers who want to lock in profit and that sort of thing. And as we get into December here, the ATR levels will come back into play again. Call trigger situated about 874 right now. I don't know why it keeps disappearing, but that would take it up if it was able to hit through that +1 ATR in December, take it to 1002 at the moment. And then the put trigger would be down here in the high sevens. So something to sort of keep an eye on there as things evolve. Phase oscillator down here, getting quite exhaustive seeming, up all the way at 170. So it's could be a quick approach to 200 there, which to me feels very, very high in the oscillator. But I have the oscillator at the bottom for a reason. It's kind of what I would take into account the least of all these other things, right? The ATR levels, the channel, TTM squeeze indicator, and then sort of, add in the oscillator there. So just because it's overbought in air quotes, not that that's what that oscillator is particularly, but doesn't mean that it can't continue to be bought. Like I said, it's going to depend on news items, actual fundamentals, and then what institutions and retail are doing, and it could just have silly catalysts like meme qualities and all of that crazy stuff that we've seen in the past led us to the NFT market and everything. All right, I'm getting way out of bounds here for this video, but these are the levels. Hopefully that's helpful. I'll scroll left so you can pause it and just take a look at those levels that are a little stretchy at the moment, that don't show up readily. All right, folks, well, I hope that you have had a happy hump day and that you have a nice rest of your week. And as always, I appreciate you watching, and I will see you in the next video.